This content reflects my own personal opinions and is not financial advice. With that said, let's kick off today's episode. Imagine earning daily yields from US Treasuries accessible 24/7 all through the power of blockchain. Ondo Finance is making this a reality. Stay tuned to see how this innovation is reshaping the financial landscape. Ondo Finance is at the forefront of financial innovation, offering tokenized US Treasuries through their fund product denominated OUSG. By leveraging blockchain technology, they're transforming traditional assets into digital formats, making investments more accessible and efficient. Governments are increasingly exploring alternatives like Ondo Finance as they grapple with ballooning national debts. MasterCard's multi-token network, MTN for short, is designed to streamline digital transactions. Ondo Finance's integration as the first real-world asset provider allows businesses to earn daily yields via tokenized assets with 24/7 access, eliminating those traditional financial barriers. The XRP ledger, on the other hand, is a decentralized blockchain tailored for institutional use. By deploying OUSG Fund on XRPL network, Ondo Finance offers institutional investors secure, efficient, and indeed compliant access to tokenized US Treasuries, thereby enhancing liquidity and investment opportunities. Traditional national debt management faces challenges like inefficiencies and limited accessibility. Tokenization, on the other hand, as pioneered by Ondo Finance, offers solutions by digitizing assets, potentially leading to more transparent, more efficient fiscal policies globally. What if I told you that you can own part of $1 million property for just $100? Sounds crazy, right? But thanks to Mantra and real estate tokenization, the housing market is going digital. A revolution led by blockchain technology and powered by Mantra. Imagine a world where you don't need massive savings or a spotless credit score in order to invest in real estate. So what exactly is real estate tokenization? It's the process of converting physical real estate assets into digital tokens that live on the blockchain. Each token represents a small fraction of a property's ownership, just like holding shares in a company. This means that instead of shelling out hundreds of thousands of dollars for an entire house or apartment, you can invest in high-end properties by simply buying tokens. Think of it as breaking down real estate into bite-sized investable pieces, making real estate markets more liquid, global, and inclusive. Why is this such a game changer, you might think? For first-time buyers, this opens the door to property investment without the crushing burden of mortgages or skyrocketing home prices. For global investors, it means access to international real estate markets without complicated legal hoops. With Mantra's blockchain platform, you can own part of a luxury apartment in Dubai, a beachfront property in Bali, or even a high-rise in New York, all from your phone. This creates a fairer, more flexible real estate ecosystem where anyone can build wealth, regardless of their background or location. This new model can extend far beyond luxury apartments. It's about democratizing ownership across all types of real estate. The blockchain isn't just a tech upgrade. It's an equalizer for financial freedom. This tokenized solar panel ownership, and of course, it's hitting the actual energy utility giants like the likes of Enel Group. Italian green energy company Enel Group has entered the tokenization market to launch fractional ownership of solar panels on the Algorand blockchain. Now, this is, again, another example of a real-life problem of helping consumers to bring down the cost of energy bills in their household. And we all know the benefit of solar panels, but what happens if you actually bring that into the tokenization space? As cost of energy is in its all-time high, and this announcement from Enel Group merging with Algorand blockchain to tokenize these solar panels and enabling fractional ownership units of these on the blockchain for investors to participate, own, and hodl over time, this is inevitably going to bring tremendous maximum rate of return on those investments held on the blockchain. So I think this is yet another example of fractionalization of assets, allowing multiple parties to own smaller portions of an asset on access markets that traditionally require significant investments. You see, this is the appeal of real-world assets tokenization. Not only does it provide fractional ownership of assets, a representation of the blockchain, is very egalitarian in the sense that enables any type of investor from all walks of life to be able to participate. So you can see that it just doesn't stop with the case of solar panels, but also real estate, even arts and collectibles, financial instruments, which I've just touched on earlier on, and also football teams, basketball teams, anything that you can think of that has that monetary value attached. Those are perfect investment opportunities for tokenizing those physical assets onto the blockchain. And that is what real world assets is all about. That's all I have for you for today. If you value clarity on Bitcoin, blockchain technology, and real world assets tokenization, stay alert. Subscribe and enable all notifications to stay ahead of the curve. Share this episode with those who need to understand what's coming, friends, family, and colleagues. This channel aims to deliver insight, no noise, and no hype. Subscribe now.